There is a sleeper in Twitter that we think most people don't understand. What we're seeing is that this platform, which used to be dominated by tweens, teens, and celebrities in 2012, when we first evolved our research ecosystem, has now evolved to knowledge workers. And we find it essential at ARC to engage with the communities we are researching and actually to become a part of those communities. This is a very powerful social network.
That's ARK Invest Cathie Wood speaking to Squawk Box this morning about why her flagship innovation fund picked up shares of Twitter. You can check out that full interview online at cnbc.com/pro. Twitter rising as much as 5.5% today, but if the stock's a sleeper, it's having a nightmare, down nearly 15% for the year, now without its longtime CEO Jack Dorsey. Dan, what do you think? Is she right? Is the stock about to pick up?
Well, she's right about the fact, the importance of the platform, and we're all power users, so we recognize that. And I think, we've all been very constructive on the story, but the stock has been really hard. I was very disappointed when I saw the news. I don't think anyone was disappointed that Jack left. I think it was probably time, but their choice for the new CEO, I think, is disappointing when you consider their inability to come up with good technology to better monetize and grow their user base. That's it. That's the problem. So I don't know why you would promote the CTO to be the CEO of this company. So I'm no longer in the name. I think we're going to see lower lows. I think we'll see the stock below 40. She could be right if there's another evolution of this company, but they have been unable, I think they call it daily monetizable active users. I mean, they are on this 200 million bound, and I just don't really see how they're going to be able to better monetize it. We've seen a lot of new products this year. They've got rid of some that haven't worked, fleets and this and that or whatever. Let's see super follows. Let's see spaces. There's some interesting stuff, but I don't see them getting to 500 million users based on those products.
Yeah, those long-range targets are sort of what even the bulls, Tim, say is at risk. And they also point out, engineering fixes aren't something that get solved or show their worth in a quarter or two.
Yeah, I agree. I mean, look, it was just that investor day back in February, not that long ago. They said they're going to double revenues in 3 years to 3.7 to 7.5 billion, that they're going to get to 315 million DAUs. I think there's a credibility problem from management. I mean, they've said a lot of things over the years and never hit them. I mean, and yet going into that investor day, the stock almost doubled. So I think there's a lot of investors that really bought into that, and I think the re-rating that went on was a mirage, and I think they need to prove it.
Guy, they've been through sort of the kissing machine regarding speculation of a takeover, whether it's Microsoft or Salesforce. We've all heard these scenarios being spun. But do you think there's a likelihood that someone takes a fresh look at it, given sort of the societal liabilities you'd have to put up with owning this thing?
I've never been in one of those machines, so it's hard for me to comment on that. I think the answer to that question is absolutely yes. I think it's too valuable an asset in this environment. And, Tim just mentioned the $7.5 billion. I think they'll get there by 2023. And if you start doing the math, at current prices, they're trading about 5.5 times revenue, which, given if you look at it against their peers, is sort of cheap. So I'm with Cathie Wood on this one. I think J.P. Morgan just came out and said they could see the stock doubling. And I think your point about M&A, I think that's sort of the cherry on top. So I actually like the name here. I'm in the Cathie Wood camp. I'm not in the kissing booth or whatever you just mentioned before.
Well, good luck on that.